our very own Miss Kanwal Cheema. She is, first of all, president of OPEN Lahore, this very organization, and she is founder and CEO of My Impact Meter Private Limited. My Impact Meter is a marketplace and a social media platform that helps people create impact globally, connecting donors and impactors together. Ms. Cheema has an MBA executive and a graduate certification in social impact from UNSW Sydney. She graduated from FAST, Islamabad in 2005 with a degree in computer science. She provides consulting services to Pakistani and international startups as CEO of Alpar Consulting. She is also involved in mentoring activities for students and young professionals. And finally, she is obviously president of OPEN Lahore. With that, I would like to invite her onto the stage to start the webinar. And she will also be introducing our panelists.
So let me invite to stage our panelists, and then once they were seated, I'll introduce them. Monis, Khurram Zafar, and Zafar Khan, please come on stage. Assalamu alaikum, everybody. So I hope you had a great dinner, but I hope you haven't eaten too much because we still have a lineup of sessions, so we don't want you to sleep right now. The first one is going to be this panel session, and then we have another session which is going to be a live stream by Sal Khan from Khan Academy. I just want to talk a little bit about OPEN Lahore. OPEN Lahore basically is that organization which connects the entrepreneurs, professionals, and investors from all over the globe. We have 27 chapters all over the world. And so all of them are back to the home ship, which is Pakistan, the local startups over here, to foster this culture of investment and for the local startups to expand globally and the global businesses to have their operations in Pakistan, back office expansion in Pakistan, and other things. So we are really well positioned to help people in this new technological revolution and also to play our part in the economic development of Pakistan. And today we're going to be talking about some of these startup challenges that we've seen in the past. The topic of today's discussion is an analysis on the some of the failures that we've recently had in Pakistan, startup failures. We saw Airlift pack up. Airlift was touted to be the next unicorn of Pakistan. Also raised the largest amount of funds. And then we had Careem shut down its food business in Pakistan. We had Swivel reduce its operations, many others. So we're going to analyze what the reasons behind that was. I have an excellent lineup of panelists over here. So let me just introduce them. We have Khurram Zafar Saab. He is the managing partner of 47 Venture Investments. And he also founded the Center for Entrepreneurship at LUMS and later raised public funds to scale it into National Incubation Centre. Khurram is also a member of the Prime Minister's Task Force and a director at Khurram Zafar, Pakistan. Previously, he has taught in the LUMS MBA program, advised both Punjab and federal governments in various capacities, served on the boards of Punjab Pension Fund, Mobilink, IDAP, and AGC Steering Committee for Technology Development Fund, and was a CIO at Lahore Stock Exchange. Khurram has also worked and consulted in various capacities with multiple companies in the Silicon Valley and Pakistan, comprising of startups, consulting firms, product companies, VC funds, and Fortune 500 enterprises. Next, we have Monis Rehman. Monis is the co-founder and CEO of Dukaan, a digital commerce, payments, and lending ecosystem for small businesses and their supply chains. He also co-founded Finja, a licensed SME digital lending fintech, and Rosie, a leading employment and financial wellness platform for salaried professionals and freelancers. The one which is really close to my heart, which Monis did, is his company Rozgar, which provides work placements and opportunities for blue-collar workers. And finally, we have Zafar Khan, last but not least. Zafar Khan is the co-founder and CTO of Truckistan, which is a technology-enabled less-than-truckload business, whatever that means. Zafar can explain that to us. Its mission is to make LTL operationally efficient, trackable, and safe. He's also the founder of Sophizar, which is a Lahore-based internet marketing company. Previously, he has been the CEO of Empiric AI and Engro Digital. The one thing that inspires me a lot about Zafar, and I follow him very fervently on Facebook, is his excellent parenting. The way he has raised his kids, exceptionally talented and accomplished children, whose achievements I follow closely. So Zafar, I learned a lot from you there in that department.
There's one sitting right there. Yes.
So how can we miss that? So Zafar Khan, founding chairman of Open Lahore as well. So Open Lahore was founded what year, Zafar?
2012.
2012. Do I need to hold?
Did you know the answer to that? It was like a pop quiz? Or?
No, I knew the answer to that. I actually was confused between 2011 and 2012 because I actually was on the founding team as well, but I forgot. So that's why I asked you. And for the benefit of the audience here. And we're now reviving Open Lahore. So this event is, thank you so much for attending, and we hope you get something out of it. All right, to kick this off, just a question, guys. Do I need to hold this or is this mic enough for me? Because this is uncomfortable. Okay, we'll just keep it here. All right. So to kick off, we know, there's global recession that's happening. Facebook laid off 11,000 employees. Amazon became the first company in the history to have a $1 trillion loss on the stock exchange. That was in the news yesterday. So is it because of the global recession, or is it something to do with the Pakistan economy or the Pakistan circumstances, the political turmoil here? Or would you say it's the fundamental, kind of the mistakes or problems with the startup itself or the leadership at the startup? So let me start with Khurram Zafar, you to answer this question, kind of shed a little bit of light on it.
So, Kanwal, businesses are like me, they shrink and expand in cycles, right? So, whether it's industries or economies, businesses, countries, a lot of the times when you sort of take a step back and take a big macro view, you would see these patterns of strengths, weaknesses, and businesses go through that. It's normal. Sometimes there's back when we were in the valley, there was a period was called a period of irrational exuberance, and we've all been through that. Where startup valuations were going through the roof, and there was a big bubble that blew up, and all of a sudden valuations came down. And then again, there was value building, and good entrepreneurs are able to see through these cycles and manage the businesses in a way where they're able to conserve their resources even when there's times of influence, and they use them to sort of persevere through downturns in businesses. So I think it's nothing abnormal, but yes, we've gone through a once in a century event, COVID, past couple of years, and that has had a rippling effect across many industries in many countries, which has caused a lot of the downturn, or in cases where there was again irrational exuberance, it has brought the valuations and expectations back to norm. And there's certainly a lot of money printing and a lot of inflation as a result of that. And now there's a sort of race to sort of contain and tighten the economy to the extent possible, and that's going to have its ripple effects in businesses all across the globe.
Excellent. So, Khurram Sahab mentioned COVID as a big contributing factor as well, and rightly so. It was a once in a 100-year event. However, some companies they argue that some companies, especially when it comes to tech, really benefited from that and took off. And COVID set a new precedence of being, that technology can be used to do a lot of things that were not possible before, that, physical presence was needed and all that. How do you think that, how does it work for a tech startup, and what are the opportunities in that for a tech startup? Monis, to you.
So, I think the last few years has just been, they have been revolutionary for Pakistan's online ecosystem and online economy. As Khurram was saying, very rightfully so, for us, this is deja vu. We've seen this happen before in the Valley when the dot-com boom started, and Zafar has as well. So we saw an influx of about $1 billion, every month into a very small area called the Valley. And we saw Hotmail and we saw dogfood.com and you name it spring up. We saw the dynamics that were involved in attracting talent from outside the startup ecosystem, inside the startup ecosystem, the hiring that happened and the issues that happened around that. And then when the money dried up and the models didn't prove to be as large as we thought they would be, this has all happened before. What we're seeing in the local ecosystem is, interestingly, it's a mirror of what happens when a market comes online very quickly and attracts VC investment, which we never had in this country before. This happened after COVID. It's a consequence of what happened after COVID, liquidity, etc. But the opportunity that's been created in Pakistan is phenomenal. Yes, we have a recession, we have a slowdown in VC investment, but if you look what's happening now in this country, I've been here since 2003 when we had 1.8 million internet users using DSL. And I've seen today now 80% of all adults in Pakistan, including your household staff and the man on the street, has an interconnected smartphone. And they have a wallet through which they're accepting and they're making their payments. And now with the influx of about $500 million of VC investment in the last couple of years, very smart people have moved back and they've started spending money and they've made mistakes because we're taking this huge economy that's offline and we're migrating it online, and it's happening. It's happening in front of us. And so mistakes are made. The economic estimation goes wrong. The spreadsheets go haywire. A lot of people have invested into Pakistan as first-time VCs. They're learning how to operate. A lot of entrepreneurs have entered. They're also learning to operate. So we're going to see some stumbling before we see the glory. But, it's inevitable. And if I could be anywhere in the world as an internet entrepreneur right now or during a recession when VC investment has slowed down, I would be in Pakistan.
Right. Thank you.
And to Monis's point, I've been through the whole dot-com boom as well, and the excesses in the US, frankly, were way more than what you may call excesses in Pakistan in the past year or so. So I've seen the worst of excesses, but I think there is a big message of hope over here because when I moved to Pakistan in 2004, there was no capacity, not only in terms of internet speed, but also in terms of managers or people who've been through a bubble and have gone through a scaling of a company and then collapsing. Because all these collapses, while it's very painful for the founder and especially for the investor, it's not that bad for the person who was involved, who was a manager, and who learned lots of new things. And he saw scale up happening right in front of him, and he was part of it. Because when it collapses, he's the one who steps up and says, or she is the one who steps up and say, I'll be the next entrepreneur. And then that capacity building is fantastic. So yeah, I think there's a lot of hope going forward rather than we worry about what happened to Swivel or Airlift or whatever. I'd rather say we have best days are ahead of us.
All right, so this is I'm not going to target anybody for this question, but I'll let you guys, whoever wants to pick it up first, pick it up. But I think a session on an analysis of startup failures in Pakistan will not be complete without talking about a specific case, which is Airlift. So does anybody want to weigh in on that? What happened there? I mean, there's been a lot in the news, and there's been a lot talk about it. But what do you think went wrong? Because there was an $86 million dollar raise, and it was gone in 10 months. So what do you think happened there? What would be your analysis?
Kamal, Bill Gross is a very famous investor. Did a pretty famous study where he looked at the top 5 reasons why startups fail. After looking at hundreds of startups, all categories, all industries, and he looked at team, its execution capacity, the idea, the business model, and one of the factors he looked at was timing. And guess what? The number one reason why startups fail was found to be timings. This isn't obviously mature ecosystems, but I think it's the same everywhere. So I think everything I know from public sources, I don't have any insights into it, but everything that I know from public sources, I think it was just bad timing. It's a startup that had a wonderful team. It committed to investors and themselves to grow a business in a difficult market like Pakistan. But it was also opportunistic because of COVID, because it sort of acted as a catalyst because a lot of people didn't want to go out and buy groceries and such, and they saw that opportunity and they tried to capitalize it, and they tried to capitalize it in a big way, which is what good entrepreneurs should do, or at least it's one of the tried and tested ways of growing big companies. You have to shoot for the stars, land on the moon kind of philosophy. But I think the pace at which the company was growing or committed itself to grow, it also required injection of capital at a similar pace. And everything that happened over the past 12 to 18 months, it made it very difficult to raise money, especially in a market like Pakistan. And there are plenty of reasons that we can dive into later on, but one of the factors is that globally, I think across the board, there was a major shift from moving capital from high risk assets to low risk assets because the yields were going up at a very rapid pace for a lot of sovereign bonds and such. Pakistan itself, for the past few months, if you look at the track record of Pakistan sovereign risk, it's been trading at a huge discount. And if you are an investor outside of Pakistan and there's an ask to invest tens of millions or hundreds of millions of dollars into a business, you would ask yourself a very simple question. If I want exposure to Pakistan, do I just take exposure to Pakistan sovereign risk and get a yield of 35-40% these days? 2024 bond is yielding
in dollars.
Yeah. And that's without taking currency risk, right? So when your so-called low risk assets become such high yielding, it's very difficult to make a case to invest in a high risk asset. That's certainly one of the things. And the rest was just as one of the things that happened was during the past couple of years, as the funding was coming into Pakistan, I think bulk of the capital was coming from international investors that were not necessarily committed to investing just in Pakistan. I think if you take a look at, if you take apart the numbers, $350 to $400 million or so that came in last year, I think bulk of that capital had come from investors that not necessarily just committed to Pakistan as a geography, like my fund is, or like Samayakar, or a couple of the other funds that are only Pakistan specific. Those are relatively newer and smaller funds. And when it so happens that Pakistan is just one of the geographies that you're looking to invest in, and we have to be honest, there are some tough news that are coming out of Pakistan. There are questions about the stability and macroeconomics and the politics in the country and such. And those are things that have to be tackled, and they set a certain perception among investors. And as an investor, when I have a choice to invest in, let's say 30 countries as my geographic target, I'd pick the one where at least those perception issues don't exist. So that makes me move capital away to another geography. And one thing that we have to, there's a lot of talk about $100 or $110 million being raised. it was raised from a large number of investors, right? And there were, some big ticket investors, and there, but at the end of it, that money came from, larger investors for which it was a very small, check that they could write off, and given the risk perception that was out there. So, in summary, I don't think it had a lot to do with the team, the execution of Airlift. I think it was just bad timing and bad luck that they just happened to, come into this perfect storm when they'd already committed to grow very fast pace and hired a lot of people and such. I'm sure there are things that they could do differently in terms of their business model, and they could tweak it, and that's always the case when you're growing a business. The formative weeks, months, years, you're learning and you're tweaking things. Pakistan is not an easy market to operate in. And those are things that sort of, go hand in hand. But I think if timing was a little different, if money printing continued for maybe another year or so, and the tightening was delayed by another 6 months, 1 year, we might have seen Airlift raise another $100 million, $150 million. It would have been set for the next couple of years, which, I think that's how long this, storm is going to last. And you probably would have seen me down the road.
I wanted to, Bill Gross's point, what Khurram was talking about timing, I think I want to reverse things a little bit. During COVID times, a lot of things happened. We did a lot of things. People, the whole world did a lot of things that they weren't otherwise doing. That's why this, I don't know, Peloton or something, this bicycle company.
Yeah, Peloton, the bicycle.
Yeah, so it just went nuts, right? It seemed like everyone in the world would be on an exercise bicycle. They were being priced and they would do nothing but stay on an exercise bicycle. And I don't know. So there were things that were not going to last. And this is kind of one reason why Amazon is still obviously an amazing company, but it's not doing as well. It's having layoffs. It's doing a lot of things that it had to scale up, because you sometimes, as an entrepreneur, you look at the now time as indicative of what the future is. You kind of extend that slope to infinity or something, but that's not necessarily how it may play out. So I'm not talking about necessarily Airlift, but I'm saying there was a lot of investment made in areas where it wasn't going to sustain. The underlying market was not going to sustain as much, because people's behavior, while it has changed to some extent, you still use Zoom probably 10 times as much as I did in 2019, but not as much as I was doing, let's say 6 months ago, a year ago, or whatever. So there were things that are going to change. So I think that's another factor in Airlift.
This brings back the question that, that sustainability in the business. People argue that, founders should have that kind of a vision where they see those kind of trends, which are short-lived, and these trends are going to be short-lived, etc. So what do you think are the fundamentals? So when starting, and I know, Monis, you have done many, many different startups. So coming back to that basic question, which is from a startup founder perspective, what are some of the things that a startup founder should be focused on in terms of the fundamentals of the business? To make sure, everything can go wrong, Murphy's Law can come into play, things can still, go haywire. But at least from a startup founder perspective, how can you mitigate that risk in a maximal way?
Well, for me, the answer is actually fairly simple. A founder should work on what really excites them, what really turns them on, what they're very charged about, what they believe in, and where they think they can make impact. And I think this has always been how great startups have been made. It starts with a vision. It starts with a founder or founding team that believes in it, and they validate their market and they grow. But I think we've seen this before. The story's played out before, and what happens is when you get a large amount of capital available to new aspiring founders very quickly, then what happens is the question is, well, what startup can I do that's going to be exciting? And you look across borders and you look what startups have raised a lot of money and are growing in other geographies. And investors are also looking at, wow, this startup just raised a lot of money in China or Indonesia and they're growing crazy. If only I could find this startup in another emerging market. Let's go over here to Pakistan. Nobody's here in Pakistan before. And then you have this sort of artificial insemination of entrepreneurship that occurs. Excuse the word. And you have people very charged because they've raised money and they've got investors who are saying, we want to grow like them. And guess what? 1 year later, that model's played out and you just invested and that model doesn't work. So it all reconciles. So I'm saying that, but these things are good because we got to see so many things in this ecosystem. I'm so grateful for every founder that's gone on the ground and made a difference and built Rails, because we're educating the market. We're finding out what works. We're finding out what isn't working. And as we succeed and as we fail, we're learning from each other. And it's accelerating the speed at which this economy is going online. And this whole aberration that happened in the last 2 years, whatever you say, it was terrible. It was wonderful because it's made the soil fertile in Pakistan for us to grow this economy online in unprecedented speeds. And it's going to happen.
So you say that we're learning, but are we? I mean, what we're really celebrating, or I see celebrating, and it might be just my naivety or lack of knowledge, is that we are celebrating big raises. We are celebrating, and that's what I see in the news. We are not celebrating those real fundamentals of business, or those businesses that are organically growing, those businesses that are really making the change. We see in the news, this business has raised this much, and those VC raises and I mean, I feel like getting more money, is that a lever of success?
I think you're agreeing with Monis.
I'm just agreeing with everything you've said. I'm like, absolutely, yes, you're right.
So I mean, my question is, I guess, how much of the part is it of the culture that we have here, of what we celebrate? And does that play a part? I mean, does that have anything to do with what?
But the reality is that my understanding of our culture is that we don't like failures. We hate failures. So instead of looking at the failure or why the company fails, I'm not talking about airlift, I'm just talking about in more general terms. We say, well, at least it succeeded in raising a lot of money, right? But rather than saying, yes, it raised it and it failed, and there are many reasons for failure, but have we done analysis of why we failed? If the entrepreneur, if they fail, I think it's acceptable. It's part of we're part of the 90% that fail. Perfectly fine. But at least you should have take that time out, take that month out, or take 6 months out, and really think through why the failure happened. That has to happen. We should accept failures, but we have to take that time to really look at everything that I, as an entrepreneur, did wrong. And at least I should, if I raise money the next time, I should at least not make those 15 mistakes. I can make 16 to 30, that's fine. But at least the first 15 we should not make. But to say that pushing things under the rug, but such and such thing happened and he didn't send me the funds and this time and that time, and therefore the failure happened, that in my opinion, that should not be the case. That's
Khurram sir, I would like you to weigh in on this as well, the cultural aspect of this.
I agree with Zafar. I think culturally there's we don't celebrate failure as much as we should. I think there's a lot to learn from failures, and it sort of makes the soil fertile, as Monis put it. If you put an effort and try to learn why somebody failed and how you can do things differently. Sure. But I think part of it is our media culture also. I think the media in Pakistan, maybe all across the world, they like sensational headlines, and somebody raising $100 million or $80 million or whatever is, makes for a good headline, makes people click on the story, and certainly get their content worth. Right? I think I would love to see somebody like Usman or anybody in the management team who's involved to do a very introspective analysis of what went on at Airlift, as opposed to three outsiders who not necessarily know what exactly happened with the company. Just come out by themselves and sort of share with everybody what went on, what are things that they did right, what are things they could have done differently, and how are others how can others learn from it. I think that's not very strong part of our culture also, that knowledge sharing and helping others succeed and sort of sharing whatever we can. I think we can certainly do a better job at that as well.
And we can probably certainly do a better job at finding those companies that have fundamentally good businesses and celebrating them as well, I think.
Yeah.
Shifting gears a little bit. So a global recession is on. We've seen what happened to Facebook. We've seen what happened to Amazon. In light of that global recession, I know there are startups trying to raise funds, getting a lot of pushback in Pakistan. I mean, Pakistan, because of these certain things that have been in the news as well that we've been talking about, all of a sudden investor interest has shrinked, or investors are a lot more careful. What would your advice be to investors? Monis, this is to you. What would your advice be to both sides? So founders who are trying to raise in this kind of an atmosphere, and then investors as well, on what are the things that they should be looking at given this kind of a climatic change in the global economic.
So to speak about founders first, I think founders should very quickly figure out how to make a cash flow positive business. That's critical. When you have a lot of funding, you delay that process, you build a lot of cool stuff, you do partnership, you invest in growth, and you never really test your model. You never kick the tires. And we don't have the opportunity for that now. And I think it's a blessing. The faster you're able to find live customers, validate your pricing, and get your model working and close to cash flow positive, I think even in today's climate, VCs will come to you because you have de-risked the model. Investors have capital. They're afraid to invest it right now. It's there on the sidelines. So I feel very strongly about this. Expenses should be extremely low. You should find a way to make an income and prove out your model, make money, and the money follows. The money follows. Speaking to investors, but I wish I had a time machine and I could go back 2 years. I would say to investors, look under the hood. Nobody's really looking under the hood, and it's throwing the economics out of whack. Are these claims really real? Is this really happening? And I think even now, if you're an investor looking into the market in Pakistan, you can't just invest based on a PowerPoint. There are a lot of new investors who've entered the market, and we've got this safe note type of structure where you can invest incremental small amounts, which amount to huge amounts. But then what happens is it actually inverts the economics of the startup, and it compels the startups to do certain things because it's reached a certain valuation and it needs to grow. And eventually, it just bursts. So I think investors should, as you said, look for those companies that are showing positive market traction organically, that aren't very resource intensive, asset light, and eventually it's going to be about trust. It's a relationship of trust, and being able to properly vet the market and the entrepreneur and all of that sort of stuff is also important because there's so much noise as well.
I want to add to that story to Moses' point about sort of betting the entrepreneur and the business. Without taking the name of a startup, we had somebody approach us for funding, and there were over a dozen investors on the cap table when they approached us. So as part of our due diligence, we like to talk to prior investors, and I asked the entrepreneur if I could just pick 3 or 4 names and talk to them. So the guy made introductions to one of the persons. I called him up and said, okay, we're looking to invest in this startup. What has been your experience like? And, what do you think of the founders and the business model, and what are the pros and cons? Basic questions. And the net was the person said, well, I invested because my friend, B, decided to write a check to them. So I'm happy to make introduction to B. I call up B and I ask the same question. He goes, I'm here in Chicago, but I invested because, my friend C had invested in the business.
That's exactly what happened.
That's, we spoke with 4 people and we couldn't find one
The
person
primary one.
who actually done the due diligence.
Maybe there was no.
Maybe it never existed.
I want to find such investors.
You could have been
But this is a real
D,
story.
you could have been F,
No, but thank you so much for sharing that real story. But what about
There's one more thing I want to point out. In my opinion, I mean, Monis and I started business in Pakistan roughly. I started in 2004. So at the time, I think the only person, and Monis, correct me if I'm wrong, only person who had raised outside funding, like VC funding or even angel funding, was Monis himself. Because
Zia Chisti.
okay. He's next level. Okay. He's another level, but demigods, not like Monis had raised funding, but the rest of us, we had to make unit economics work. We had to balance the books. At the end of the day, there was no one funding us, right? So we had to make sure that we have enough to pay the salaries, and we keep the lights on and pay for air conditioning or whatever. It had to happen. And it was amazing, like past 3-4 years, it was amazing to me how much money people were raising, and that sharp businessman sense that lots of people who have to make it on their own, I think they didn't really have that. And so it was great to see that happening, but you have to ultimately be, I don't want to use some words which are maybe considered derogatory, but I think of them as very positive words, like banya. You have to have that mindset that at the end of the day, I need to have something left over in the business, at least we break even. That especially in the time going ahead, in the next 2 years or year and a half, where mortgage rates in the US are 7%. I mean, it's after 30 years or something, you have numbers like this, right? The money is going to be a little tight. Money is going to be there, but it's going to be a little tight. So you have to make sure you get it to break even as soon as possible. So that people have to get used to the new times. So, in certain times, the other kind of business works, but perhaps in the next couple of years, that won't work.
Okay, can I ask a question? So, just on the flip side, where the devil's hat here, do you think that is sort of a temporary, the next 18 months sort of a modus operandi that you're suggesting? Because if that was the case, Amazon wouldn't exist, right? They started making money about 9, 10 years down the road, right? Totally. So the question is, does the Pakistani market have the depth of capital and resources that a place like Silicon Valley does? Whether that those kind of business models just won't work. I mean, you spoke about airlift. I'm not talking about airlift, but in general, grocery business, I've tried to work the numbers, and I find it very difficult to understand how to make money, good money in grocery business. Maybe airlift folks, they cracked it, and they say that they were, they cracked it for some of their markets. But I find it very difficult in a market like Pakistan how that works.
No, has anyone cracked it in the world?
Well, Amazon now with different business lines coming in now.
They make money through AWS.
That's right. So yeah, it is a big challenge. But my question to your thing was, I mean, is it
Silicon Valley gets a free pass, man. Let's it gets a get out of jail card, a monopoly. No one else gets it. That's
Everybody
really,
else has to operate like human beings.
Yeah.
But on that point, so I 2 years ago was on a founding team of a company in Silicon Valley, and just based on our idea, we didn't have any product. We didn't have anything, literally, just 10 of us. Based on an idea, we got 100 million valuation. We raised 33.5 million. Wow. So that's Silicon Valley. Right? But in Pakistan, so all right, so I'm not going to go into too much detail because I don't want to give it away. But
In Pakistan, there was a startup
when
that was
we-
raising $100 million with a PowerPoint deck
but
last year.
that's true. But
If
now,
you know the
I
power
mean,
behind Silicon Valley.
you said that you have to have your fundamentals right, be in the market, have the cash flow and all that. But to your point, it's what about those startups that are really starting? Those really some people who have this really great idea, or like maybe a prototype or a small product, or maybe very few customers, and you can't really judge them by their NPVs or your financial forecasts or that. But those are really assumptions. How would you kind of judge a startup at that stage in this kind of a climatic, the economic
I
situation?
mean, this is a leap of faith. It's what you're passionate about. And if you really like the team and they're excited about it and you're overlapping your ideas, it's super high risk. Nobody knows it's going to work. But if the investor and the founder are super excited about the same space and you have the chemistry and you have the appetite for risk, that's how you make up your mind. There isn't any financial analysis you can do on these early stage seed level startups.
And
As a
equally
venture-
important, the appetite to adapt.
Yeah.
A lot of the entrepreneurs start with one thing, end up doing something completely different. Plenty of examples of that.
So can you answer that question as well? Because you have your own, you're also a VC. When you look at such startups and any startup that you look at, what are the things that you're looking at?
So, Kanwal, I had the benefit of operating in businesses in Pakistan, being in Pakistan for a long time before I started investing. I think so. There's fundamental economics of the business. Those have to make sense, right? That we call unit economics, right? Startups may not make money because they're growing, because they're using all of that capital for growth. But you have to see that if you take a slice of that growth part and look at the economics, in a market or a district or a city or whatever, those by themselves have to make sense, right? Contribution margins have to be positive, right? You can't be putting money in a business that's a negative contribution margin business because it just doesn't make any sense. At no scale would it be able to, pay for the fixed costs of the business. So, and then you have to sort of be realistic about the real size of the market. We love talking about a 220 million population and everything gets multiplied by 220 million. But the reality is the 220 million market is, if you're selling candies for 1 rupee each, yes, that's your market. But if you're selling a tech-enabled business that, requires you to be, to have a home and order services and be willing to pay, for delivery and things like that, that keeps shrinking the 220 million market. Right? So you have to be realistic about it. And after all of that, it comes to, the matter of sort of quantifying the risk and applying that discount to the value of the business at which you're going in. You can't be going in to a deal where you see a disproportionate amount of risk, but you're not getting the value, adjusted in the price of entry for that deal. And if you can, negotiate a valuation where that, entry value justifies the risk, then yes, you go ahead. I mean, this obviously, after, what Monis said earlier, you have to believe that it's the right team, it's the right complement of skills, they're doing it for the right reasons. They have the ability to adapt. They have the resourcefulness. They have the tenacity to be able to build businesses. This is very true. The past couple of years, a lot of entrepreneurs became entrepreneurs because they were reading these headlines and there was a lot of money available and everybody thought that if I'm X this startup or X that startup. I'll just, put together a couple of friends, put together a PowerPoint deck, and I'll be able to raise $2 million. A lot of entrepreneurs, started doing that. And you have to be able to see through that. And it's not difficult to do. It's just a matter of, taking somebody out for dinner or bite to eat, or, spending time, with the team, and you find out whether they're doing it for the right reasons. And, whether the fundamental economics of the business makes sense or not. And if they do, then yes, at the end of the day, it's a high risk asset class. You have to take the risk, but it has to be calculated. And there's, at the end of everything else, there's an element of trust and faith that you're taking.
I've got a story. I just want to add on to that just quickly. We had, there was an individual who had this idea. We were speaking about the idea, and I was brainstorming. I said, do you think this is a great idea? And he's like, it's okay. I said, why are you doing it? You're going to have to spend your life on this, put everything you have into it. He's like, I got an investor. So that's why I'm doing it, because I've raised X amount of money. I mean, millions of dollars I've raised, so I'm going to do it because the risk is very low and the glamour is very high.
Absolutely. Okay, so we're just coming to the end of the hour, and we have the next session starting. We have 15 minutes right now. So very quickly, 30 seconds, can you each of you give your closing thoughts? And then we're going to take some questions for the next 10 minutes from the audience. So Zafar, starting with you.
Khurram, why don't you go first?
But look, I think the next year is going to be very tough. If you're an entrepreneur out there trying to build a business, that's great. Just the fact that you've taken the initiative and you've committed yourself to building a business, you stand apart. But I have to be realistic, and I think you have to, take the plunge, knowing that for the next year, 2 years, you have to focus on building a solid, economically sound business, and you have to spend time doing due diligence, trying to understand your customers, your markets, your competitors, and make sure that it's the right business, because it's going to consume you. Right? It's not going to be like, putting together a PowerPoint deck, going out there, rounding up a couple of friends, meeting investors, and, come back with $1 million in funding. And then all you have to do is worry about, hiring people and how much to pay. It's going to be back to the fundamentals. You have to you have to commit yourself only if you think that you can survive this business for the next, a year, year and a half, maybe 2 years. And maybe by that time you find out that you don't need any funding. You've built a very strong business that is economically, fundamentally very strong, and you don't need, the capital, which is the best place to be when you're an entrepreneur. Ideal cases, you never need to raise money. Either your customers pay for it, or you pay for it yourself, and get to a stage where you don't need any money. You can fuel your own growth by yourself. But that's my advice. You have to be really, really, don't give up on your dreams, but be very, very realistic about the businesses that you want to commit yourselves to.
Excellent. Thank you, Khurram. Monis?
Despite the doom and gloom, what's going on with the macro economy, what's going on in Pakistan, what's going on with politics, what's happening with the venture capital investment cycles, the reality is that in Pakistan, the genie's been let out of the bottle. We have an economy that's $250 billion US that is moving online. There's no doubt about it. And this migration of this offline economy to an online economy is going to result in tremendous value and wealth creation over the next 5, 10, 8 years. So irrespective of what's going on, this is probably the most exciting time for us as an online entrepreneurial sort of a community to be in Pakistan.
Excellent. Message of hope. Thank you, Monis.
Nice. So I'd like to say that it's very important when you're starting out the business to be very humble, to really think through the economics of the business upfront as much as possible. I think I see that a lot of that happening with the investors as well as with the founders is this momentum thing, that other people are doing it. Why aren't you doing it? Or my friends are investing. Why am I not investing? They must have done this. A lot more rigor is required when you start up, and if you go through that, it should help in having the business become successful.
Excellent, thank you. Now we're going to take questions from the audience. So there's a question right in the back. Can somebody take the mic there? Who is handling the mics?
Before you do that, I'd like to invite Abbas to say a few words. No?
I think let's just do the new.
After that
Okay,
question,
because
I'll bring the
he's
mic.
one of the early investors in Airlift, so he probably.
And you're on camera.
I think you got it covered. I tried not to look at you when I was answering the question.
Yeah. I was looking at you throughout. I was
So
the best person to answer
we
it.
took the blessings from Abbas before. Abbas has been, because he's a charter member of Open, so he has been in the organization of this, and he introduced me to Khurram Sahib as well. So we have the blessing from there, which is why I was so bold as well to ask you these questions. Okay, we have a question from there.
Okay, so you discussed about value creation and having a common sense of the business. Some of the businesses are going to be like a lot of businesses going to be innovative businesses, where you have to create the market itself. So how can they focus on the economic sense from the start? For example, before Facebook, nobody knew that MySpace or Orkut, nobody knew that you need a social networking platform. So you have to, if they had gone for profitability from the start, they would have never ever created a market. Even Rosie, in Pakistan's market, nobody knew before that we need a job website. So I don't think you would have gone right from the start. You would have gone targeted like I need a sales volume. You would have targeted like I need number of users. So is this going to be applied even today, or the market has changed?
So if I could take a quick stab at that. Yeah, I mean, you are absolutely right. With Rosie, we didn't charge anybody for 3 years. I didn't draw a salary for 3 years, but we knew once we had a certain size, we would be able to encash that and monetize it well. At that time, we hadn't raised funding, by the way. So we had another sort of a business on the side where we were earning our money. So for those kind of businesses that are going to take you 2 or 3 years and you need to test out the market, you should have an alternate source of income, or you should have raised a decent amount of investment.
Okay, there's a question here. Let's take that.
Yes. Very good panel discussion. We are talking about the airlift failure. So I would like to ask, from my point of view, the failure for airlift is that most of the people here, when they start the business, they want to earn money so quickly. They want to be on the sky for so quickly. They don't take time. जैसे पंजाबी में कहते हैं पहले खटी and then chatti. वो चाहते हैं just like this. In a 1 year or short of time, they go up. And second thing is near. Most of the people, when they start for startup, they don't think so to earn so much money from the startup. They put some of money to put aside. This is my reason maybe for this. What do you?
I think what the second case that you're
Just
talking
one
about,
thing.
that sounds like fraud. I mean, that does not sound like
Not as fraud.
what?
But they are not serious about that. They don't study for that business as much as they have to be.
देखिए नियतों का हाल तो अल्लाह ताला जानता है, हम में से कोई भी कमेंट नहीं कर सकता नियत किसकी क्या थी. मैं personally अपना I've met Usman a couple of times. He's the CEO of Airlift. I don't know if you're talking specifically in regard to Airlift or general.
No, overall.
Because we are talking generally of
Generally,
yes.
analysis of failure.
Yeah, so generally I
not
agree with you.
about failure.
If as an investor or somebody who's going,
Generally, most of the startup come with that idea.
Yeah.
That's what I can say.
Next question is there.
Assalamualaikum. My name is Nalish. I'm from Salt. Okay, my question is very simple. Pakistan got talent, and there are a lot of products, a lot of startups. They have very good innovative ideas, and they develop something. They are running, right? But the point is that they don't know how to raise funds. They don't know the path. You guys are the market maker. We, go through the LinkedIn news. Okay, this one, they are the company. They raised something. They raised something, and you also got the failures. And you just mentioned that. Next time you want to do those things, what you experience, right? So why don't you guys share with us, like, these are the things, you don't need that. Okay, this is the pathway. You have to go over there and you have to follow these instructions to raise the funds. And this is the documentation you have required. So we even don't know where to go and how to, raise funds and how to, make the fraction in the market and how to use that money and what equity we need to offer. We should accept that we don't have that experience. So this is something I want from your side. Like you, all of them, already experienced that. We don't want to experience again what you have experienced, and I strongly believe that failure is the key to success. Thank you.
Yeah. I think I think your point is great. This is exactly the kind of things that places like NIC should be doing, and I think they are doing. So you should see they do have workshops. You can come take lectures. These are things that some of these, obviously you can't say go to investor 1, 2, 3 and no one is going to make your pitch for you and everything. But if you have your idea, you have your pitch, there are a few do's and don'ts that you should be doing, and it's probably like a 3-hour seminar or a 1-week seminar at the most, and you should know all the mechanics of what you need to do.
Can we make that something to public, like in which direction you need to move or something? Because I'm at the moment going to be launch a metaverse product, right? And there will be 6 to 7 products under that. I'm in the process of that one, like and I did a lot of research over the to find the pitch decks, to find many more things. But still, I believe that if I'm doing this, there will be a lot of they have a very good things. They do not have that direction. Is it the only thing like we should
आपने देखिए पहली बात तो ये I think जो undertone थी हम सबके message की कि raising money or chasing money is not
You have to move on to the next question.
a success criteria for startups. You ought to be building your business and money will
Over
eventually
there.
come.
That will
They'll
be the
find
last
you
question
if you
because
build
we
a
have
good
a session.
viable thriving business. Second, even if you do want to raise money, there's no
Over there.
silver bullet, or there's no algorithm, there's no lecture that you listen to that will teach you how to raise money. It's it's grunt work. It's basically finding out who are all the. Let me ask you a question. Have you tabulated a list of all the investors who have invested in Pakistani startups? Have you done that as step one?
No.
That's your step one. But it's logical, right? If you are out in the market as a Pakistani entrepreneur raising money, find out who are all the investors that have invested in Pakistani startups in this market. They'll give you sort of a blue sky list that you can go after. Second, find a way to connect with those people within your network. Put it on Facebook, LinkedIn, Twitter, your friends, join an incubator, accelerator, whatever. Try to, find a way to meet with them. Prepare, a quick elevator pitch. You should have it handy, the top of your mind whenever you meet an investor in 30 seconds, 40 seconds, 50 seconds. You have to grab their attention. Try to secure a meeting after that. There's no algorithm. It's very basic. It's very intuitive. You just have to take the step. I think a lot of the times people use it as an excuse. Right? I don't know how to raise money, and hence I can't raise money. There's really no intricate science in this. You have to hit, 50, 60 investors in order to close a round, even if you're doing a small seed round. That's a fact, right? And people think that if somebody has raised money, they just went to somebody and they put together this act that they learned from, in an incubator, and all of a sudden somebody, took out a checkbook and wrote a check. That doesn't happen that way. These entrepreneurs have raised money. They've gone to dozens of investors. They've repeated their story. They've built in parallel. They've continued to build a business that has continued to grow. And investors have tracked their progress and eventually decided, okay, I'm going to write a check to this guy.
Excellent. So we're out of time, but since you have the mic, I will let you ask a very quick question, and the request is that we need a 10-second answer or whatever the question is.
My name is Harp. I'm co-founder of Francis from Logic. The quick question is that we have discussed a lot about products. We have not discussed about the service-based business economy. That is an opportunity right now in Pakistan. We started off targeting products, but then I shift to a services model, which was providing a lot more opportunity right now. So can you a bit quick comment on that kind of economy, and can we scale those businesses to a large scale level? I think there are a lot of shadow businesses that are working on that model, and how do you see that economy growing?
Yeah, I think you can. Service businesses are great. They don't require as much capital. You can generally just, continue to build on your own success, your own, the capital that keeps coming in. You keep investing in growing the services business. It doesn't have the kind of scale that, you typically see in product businesses. Isko hockey stick growth kehte hain. But it's slow and steady and it's dependable and you can get to profitability. You generally, should not need to, raise money unless, you really want to scale really fast in different markets or something like that.
Thank you very much.
11 seconds.
Thank you very much. So we will now move on to the next session.